Thank you, Martin. And good morning, everyone, and welcome to today's presentation. Today is a humbling morning.
So it's a humbling morning, and it's also a humbling evening for Embracer, for the CEO of Embracer. So, and what does he mean with this? So this is the Embracer chart, my friends. You see 44.82% decline, drop, fall since just today after this major news that popped out, and we're going to dive into this webcast that you can find here on YouTube. And I think it looks devastating and it is terrible, and I'm also showing you or giving you here an update on my portfolio. So here we go, guys. So that's an update on my portfolio, making it a bit smaller. Here you see it. So today alone, my gaming portfolio, this is my gaming portfolio. So 1,734% down. I mean, the day is not over by recording this video. And you can see from all of those gaming companies that are down today, 44% here on the Embracer group. Then also Starbreeze, a little gamble that I recently bought, also 8.39% down. CD Projekt also went down together with all the other European gaming companies as well. Ubisoft, Nacon, Bigben, Tencent, Digital Pros, and Corsair is also down. The only positive one is Playway and Ultimate Games, and Rovio, of course, since it's going to be acquired by Sega, is also up, and Starward Industry. So guys, it is a very, very bad day for European gaming stocks, and probably also for gaming stocks in general. I mean, the market is not that good today. So very sad to see, but guys, I would say we can jump directly here. We go directly here into this webcast, so, and we get some reasons, some information, and of course I can also to give you some comments on this.
In today's presentation, we would like to describe some background and rationale for the aforementioned strategic partnership deal. Even if it serves little financial value going forward, it hopefully answers some questions about our communications and our decisions. In the second quarter 22-23, we outlined our ambition to close a number of partnership and licensing deals that will be jointly transformative for Embracer. We have already entered into multiple partnerships and licensing.
You remember I was mentioning this in one of the latest videos, so they were already giving us some indications that's not going to be so good for the report, but also they said, yeah, they had their partnerships not closed yet.
Agreements with industry partners on both AAA games and movies based on some of our iconic IPs. Except for the already announced deals that have more limited short-term financial value, we have been working on one groundbreaking strategic partnership agreement that would have...
Yeah, of course, everyone is asking the question, who was this partner you were working on? So they're not telling us. We will not find out. Also, throughout the whole webcast, you're not going to get any information on this. So I can assure you there. So I watched the whole 2 hours and 20 minutes.
We've set a new benchmark for the industry.
New benchmark, huh?
And trust me, I've been spending a lot of time on this.
He's getting emotional.
Negotiations have been taking far longer than originally anticipated, considering we had a verbal commitment already in October 22. The specific deal includes
also the verbal commitment throughout the webcast. The questions come back about the verbal commitment, also to just find out, is this verbal commitment, what does it mean that it's that the partnership is not happening? Is the partnership completely from the table, or is the partnership just happening at a later stage? That's what therefore he says it's a verbal commitment, but it sounds more that the partnership is not going forward at this point.
More than $2 billion in contracted development revenues over a period of 6 years. The deal would have enabled a catch-up payment at closing for already capitalized costs for a range of large budget games, but also notably improved medium to long-term profits and cash flow predictability for the duration of the game development projects. The transaction had many of the highest rated global advisories across various segments, on board with several hundred people engaged on both sides. All documentation was finalized and ready to go as of yesterday. We asked for the execution of the agreement before our Q4 announcement. However, late last night, we received a negative outcome from the counterparty. This decision was unexpected to the management and the board of directors of Embracer.
So that's something he has to say. We don't know if it's really the case. If it, I mean, it's never unexpected. If you're negotiating, so believe me, if you're negotiating, you're always thinking about what happens if it fails. Especially if you're waiting until the evening before you are delivering your earnings report. I mean, it's like if you have to do some homework and you're just doing it the very last moment before your school hours start. So that's obviously too late.
Capitalizing on our collective value through our partnership approach remains a key priority for the group. We will continue to seek partnerships and collaborations with third parties across all our segments, including opportunities within transmedia. The demand for content has never been greater, and Embracer is well positioned to meet that demand. We still have ongoing discussions about additional partnership and licensing deals, but the impact of potential deals is not included in the management forecast for the current financial year. That said, our ambition is still to increase the share of externally funded game development. The long-term ambition for Embracer is to build something significant and long-lasting, and to do it together with successful entrepreneurs and creators. Today, we have one of the industry's largest portfolios of games and IPs, with more than 850 owned and controlled IPs, over 130 internal development studios, and over 200 games in pipeline, and with transmedia expertise within tabletop, games, comics, and movies. With that said, I would like to hand over to Johan for our forecast.
Thank you, Lars.
So he was making the introduction to explain us everything about this deal that is not going through. So that's the big information you get also on different pages as well, like here on Reuters. Tomb Raider games firm, so haven't even released one single Tomb Raider game in the time that Eidos Montreal is part of Embracer. So we have to admit this. So here, that's the whole thing. So last line here also he says the deal is not going to go through, and then the forecast is also lowered. So that's the most important part. The forecast is lowered. The deal is not happening. That's the reason, guys. That's the reason, guys. Why in the end the stock was dropping so much, 44%. So I mean, this is massive, guys. This is really massive. So I mean, we were already in a I would say in a range where you would say, yeah, in this Fibonacci retracement, if we find the bottom here, so I was talking about this before, when this would be great. But you see, actually then here, when in mid-May we were dropping those 50%, so from 53 to 41, 42 Swedish crowns. So I thought like there's a lot of negativity already in the stock, but I also said, so we don't know what is coming. So we don't know what is coming with the next report. And then also we always had this Financial Times article about the accounting of the acquisitions of gaming company. So also keep this in mind. So this drop is massive. I haven't seen this so often. So we had it in Ubisoft. We also actually, let's go and compare. We had here in Ubisoft, we had not, of course, those massive drops. So from here, that's maybe the Corona times, but in general, also Activision sometimes was dropping like massively here, 42% back in 2018. I was invested. So those drops happen. Those drops happen in gaming companies. Let's put it like this: gaming companies are volatile, and sometimes those are opportunities to buy more. So I'm not a financial advisor. I'm just a YouTuber, retail investor myself. You have seen my portfolio, so I'm also overall in the minus with my gaming companies stocks. So therefore I'm always saying, so my friends, you have to take good care. You have to take good care about your investments. So make your own research. And here we see the forecast for the financial year 23-24. And we're going to continue to watch now this video, the webcast.
We have updated and lowered our adjusted EBIT forecast for financial year 23-24 to 7.7 billion to 9 billion versus previously 10.3 to 13.6 billion in adjusted EBIT.
That's the forecast. This is what happened. Therefore, the stock dropped. But is this justifying a drop of like over 40%? Is this justifying this drop? That's a good question. I mean, I think some big investors were just leaving Embracer. Some big investors just went away, stepped away, and said, "Okay, in the short term, this is maybe too difficult to stay in this stock."
There have been
accountant issues. Are the accountant issues? Are they coming back? Are they coming back, guys? I mean, that's the big question I'm asking myself. And to be honest, I don't have an answer for this.
Several changes in expected release dates moving forward for unannounced titles in 23-24. Consequently, several games with the potential to generate more than 1 billion SEK in net sales are now slated for fiscal 24-25. Due to these delays, and without the significant transformative partnership deal, we expect to generate between 7 to 9 billion SEK in adjusted EBIT with improved cash conversion and setting a healthy growth outlook for the years after 23-24. To give some background to the financial guidance for fiscal 23-24, if we compare that with the original forecast that was presented in the Q2 report of 21-22, it is notable that at least 6 notable releases net have moved out from fiscal 23-24 to later years. Looking at the segments, in PC console, we expect an underlying earnings growth driven by more owned and self-published large budget game releases during the financial year. The forecast includes more cautious assumptions for certain releases and
so that's very important. Be cautious now, Embracer. Be cautious.
Certain categories of games. Several additional large budget games are expected in fiscal 23-24, including the already released Dead Island 2, and additionally already announced titles such as Space Marines 2, Remnant 2, and Payday 3. There are still...
Those are the 3 most important games, the upcoming games, but besides of this, they also have a 4th game, a 4th, let's say, AAA game, and there we don't know the name yet of this game, and I think it has also postponed in the next fiscal year.
A number of unannounced notable titles waiting to be announced for fiscal 23-24. For the mobile game segment, we expect a low single-digit organic growth with gradually stronger growth during the financial year. We assume a stable, soft underlying market trends with some gradual improvements for ad monetizations throughout the year. The adjusted EBIT margin is expected to be largely in line or slightly above what we saw in fiscal 22-23. For the tabletop game segment, we expect high single-digit organic growth driven by trading card products with an adjusted EBIT margin slightly below fiscal 22-23.
Thank you, Johan. I would like to add a little bit to that. So we are working actively now.
Now he tries to explain us that the world is not that grim, but yesterday was bad.
On efficiency improvements initiatives. Worth noting is that they will be announced in due course. These efforts are likely to benefit profit margins and cash conversion for fiscal 23-24 and reach full run rate during fiscal year 24-25. We expect to reduce capitalized development projects while continuing to invest to grow our established, profitable, and beloved franchises and IPs. We will de-emphasize third-party publishing and externally developed games based on external IPs. We will increase focus on net cash flow, and with further initiatives, we expect to reach a financial debt below 10 billion SEK by the end of this financial year. Now I would like to hand over to Martin for Q&A.
All right, guys. So that was the introduction of this 2-hour video with a lot of Q&A and some more deep dives. So very, very interesting. So I can recommend you to check it out, to watch it fully. So if you're an investor, then it's definitely good information for you, especially if you're now considering to buy some more, or if you're considering to buy the stock, then it's definitely worth it to check out this webcast. So those 2 hours you should invest those 2 hours before you invest your money. This is, in my opinion, a very, very important aspect of investing in general. Then you will also see that the CEO is kind of emotional. I can understand. I mean, he just lost like 44% of his wealth. So most probably he has a lot of money in Embracer Group, so a lot of stocks. So therefore, I understand that he's also a bit emotional on this. But on the other hand, he says he is a long-term investor, and as a long-term investor, then he hopes to grow the company in the future. So we all hope that the company still finds its footing, finds its bottom, and then that the stock price can continue to grow. So the big question is, what are the problems with Embracer? I mean, probably I would say, I mean, it's very difficult for us outsiders, even if you're a shareholder, to say what the problem is. So, but the problem could be that they like not focusing enough on quality games, but on quantity. Then the problem could have been that they were not adjusting their management due to the growth of the company itself by acquiring a lot of small studios over the last year. So that's maybe an issue. And then of course, I personally, as a Steam player, I would say also bring your games to Steam and not only Epic exclusive, but they would argue probably they get so much money from Epic Games that it's better for them to release the games there. So I don't know. I mean, it's not just the money you get paid upfront by Epic Games. So it's also the brand that you can build on Steam with a game on Steam. If the game is good, if the players like it, like CS:GO, like all the other like Left 4 Dead, etc. So the Valve games, for example, it's a whole community that creates around this. So therefore, I would always say use Steam. If you're a gaming publisher company, then you should use Steam. So that's something I'm criticizing, that they are putting too much effort on the Epic Game Store, and they should come back to Steam with most of their games, especially Dead Island was not released on Steam. All right, guys. So what is your opinion? Are you holding the stock? Are you planning to buy some more? Are you going to sell? Are you going to just hold your feet still and not buying? So I personally, what I'm going to do is now observing this with a very critical mind. So because if I see a drop of 44%, I'm very reluctant to throw immediately more money into this stock. So I'm very critical. I'm staying a little bit on the sideline now, and I'm going to read much more, and I want to find out what is going to be what is the potential of Embracer. So obviously, since I bought Embracer before, I was mistaken. So I bought an overvalued company, and Mr. Market shows me now what is the real value of the company. So maybe this is excessive, but if it's excessive, there must be also a reason why it is excessive. So with that, I'm leaving it here, a 20-minute video. So I hope you enjoyed this, guys, and see you the next time. Bye bye.